traders all around the world. This is FXPassion broadcasting you live on YouTube, and this is Forex Trading Course 101. Remember, we are trying to build the three pillars. We are trying to form our strategy and our system. We are going to learn about the risk management. We learned about the basics, and we want to understand how psychology works together with risk management and our strategy and our system. Hello, George. Also remember that 90% of traders lose money in the Forex market worldwide. And there is disclaimer, the webinars are not, hello Miguel, the webinars are not investment or trading advice. The webinars are for educational purposes only. And don't trade with the money you cannot afford to lose, everyone. If this is your first time, we are in the beginner module. We are not talking about market structure, highs and lows and trends anymore. We are learning how to use trends, trend lines, support and resistance levels, pivot point levels, and we didn't learn yet, but we are going to address candlestick formations, I believe, next week. So that being said, let's dive into the live markets. Hello Silas, how are you? Everybody give me a currency pair. Okay, so today the lesson is stop loss and take profit in support, resistance, pivot points. Okay, what we are going to use? We are going to use what we know so far. We are going to use trends. We are going to use structure. And remember, I have a 20 seconds delay on the chat. As a beginner trader, we have learned trends, we have learned structure, we have learned the market wave. And today we are going to talk also about how to use, where to put the stop loss level, where to put the take profit level, and why, together with the levels of support. Hello, Annie. Silas, estou bem, obrigado. So we're going to use the support levels, the pivot point levels. Okay? This is what we're going to do as beginner traders. We don't know Fibonacci yet, we don't know Ichimoku, we don't know Stohastic, RSI, MACD, right? We're going to this. Okay, in the meantime, I'm going to start with the NZD CAD, okay? So what we're going to do, I'm going to go on the NZD CAD monthly chart first. Okay, NZD CAD monthly chart, I'm going to draw first what? The pivot point, and it's an area, we learned this. It's an area, it's not aligned to the pip. Pivot point area, we have another pivot point in here. Okay, I'm not going to draw anything else because we are in between right now. Okay, but just I'm going to use those two for the lesson. Okay, I'm not going to go up and down because it's not relevant for this lesson. Okay, now I'm going to jump from the monthly on the daily. Okay, this is the daily chart. This is the daily chart. I have two pivot points. Okay, and from the daily is going to be our confirmation time frame. The daily is going to be our confirmation time frame. The daily is going to be our confirmation time frame. So I have the two pivot points, and what else we're going to do? Well, we are going to address in a downtrend, right? We're going to address, so we have past support in here. Let's sparkle this in what? Red. Okay, let's go with the red. So past support 1, past support 2, past support 3, past support 4. It's not past support, everyone, it's resistance. Past resistance. Yes. Past resistance 6, 7, Okay, one more. There you go. Okay. So as a beginner trader, we learned all of this, right? Now what else can we do? Well, we can address the market wave, right? So extension, retracement, extension, retracement, extension, retracement, extension, retracement, and extension. So this is the market wave. Let's color code this in yellow, maybe something like this. Okay. Any questions so far? Victor, are you online, Victor? Everybody, is it clear why I started from the monthly chart? Why I jumped from the monthly to the daily? Is it clear? Why I'm doing what I'm doing? Miguel, Silas, George, Annie, Victor, Mitzach if you are there, Aske if you are there. Is it clear? Eddington if you are there. Any questions? How and the why? Okay. Now I have this on the screen. Clear. Okay, great. So I'm going to jump on from my daily time frame, I'm going to jump on the 2-hour time frame, which is my confirmation time frame. Question number 1, everybody. Should we trade the market up? Should we buy the market? Should we go long? Or should we short the market? On the 2-hour chart, what should we do? What should we do? Should we go long, buy the market, or should we go short, sell the market? Right now, I'm not talking about the long-term bias, right? It's always the same story, everyone. Trade what you see, not what you are wishing for that the market is going to show you. Okay? So, of course, there is no right or wrong. You can go both sides, but right now, what should you do? Should you be shorting the market? Should you go long? I'm going to delete the arrow. Victor, long. Great answer. So on the 2-hour chart, short. Well, you can go short, but not right now, Silas, because the market is making higher highs, higher lows, higher highs, higher lows, and this is the market wave at this point in time. Which color? Red. Not the best one. Black. Okay. Silas, not short, not yet. Maybe later. Okay, maybe later, but not yet. Okay. Long, yes sir. Long, you have Chukashilo, yes ma'am, yes, Annie. Okay. Now, of course, the picture now is clear because we are seeing, right? But if we wouldn't have the market, right? We don't have the crystal ball when the time comes to trade, right? And if we would short, if we would go long, maybe not the best example. Let me see. Okay, if we would go long in here, counter trendline break. Let's color code this in yellow. Okay, and full color. There you go. If we would go long in here, everyone, no short, we have instruct uptrend, no long, wait for the short term up. Yes. Okay, so when the time to trade comes, right, and you don't know what is going to happen, but we would enter going long up in here with this beautiful counter trendline break. What do you think where your take profit and stop loss should go? What do you think? because the title of today's webinar is Stop Loss and Take Profit in Support or Pivot Point, Resistance. It would be better to place a counter trend break before entering long. Yes, there you go. Yellow line. So we entered in here, okay? Full body candle closed, we entered in here. Now, where should the stop loss go? Okay, and I'm going to give you two choices. Stop loss number one, below the structural, what happens to be, right? Or we think it's the end of the retracement, so structural low, right? Or stop loss should go below the second structural low, okay? Stop loss number three could go below the uptrend line, right? And stop loss number four would go here, down here. So I'm going to give you the numbers, everyone. So stop loss number one is going to be here. Stop loss number one. Stop loss level number two. Okay. Stop loss level number three. And when you're going to choose a number, everyone, the next question you can prepare yourself is going to be the why. Teacher, why did you choose stop loss number one? Teacher, why did you choose stop loss number two, number three, number four? Okay. Now, which one do you think is the best or most logical, technically speaking, most logical place to put your stop loss and why? Take profit below the red line resistance, stop loss below the green line. So is two, is stop loss, and it says number three. Okay, what about you, George, Silas, Miguel, Victor? What about you? There is no right or wrong, all the stop losses here are okay. Better to have the 1, the 2, the 3, the 4 than nothing. Okay? George says 4. Okay? What about you, Miguel, Silas, Mitzach, if you are online, Victor? 4, because you are out of the market. Okay? Anybody else? There is no right or wrong. So George is on 4, Miguel is on 4. Okay. Now this is the stop loss. Great. Now let's go step by step. For the one that you choose, the stop loss number 3, I'm with Annie, okay? Me and Annie are here. So this is going to be our stop loss, me and Annie. And Victor, George and Miguel, you are here, right? This is your stop loss. So number 3, number 4, okay? Now, before you enter into the trade, what's the problem? Victor says 3, okay, great. There is no right or wrong. So, before we enter into a trade, what's the problem? Can you see a problem, everyone? At least theoretically speaking, because we don't have the crystal ball. Right? What's the challenge? What's the challenging part? Our entry is one part. We have a great entry, yes sir, yes ma'am. Then before we are going to enter into trade, we need to check and decide, it's a decision where to put our stop loss. And we have a few traders saying number 3, okay. We have a few traders saying number 4, okay. Both groups have a problem. Technical problem, Okay, what's the problem? I don't know. Okay, fair answer, of course, great. Where should the take profit go, everyone? Where should the take profit go? Listen to what you are going to answer. Where should the take profit go? There is a resistance at relatively low level, so the take profit divided by stop loss is not big enough to trigger more. Where should the take profit go, everyone? What do you think? Or should we start, well, who in here is going to enter the trade? I would enter this trade, no problem. Easily, I would enter this trade very easily, no problem. Okay? Near the red line, along the range. What do you mean, Victor, along the range? Annie chose the stop loss number 3, right? And then he said, well, in my opinion, the take profit should go up in here. And we're going to color code the stop loss like this. This is the stop loss level, red, red. So Annie says up in here, double length of the stop loss, okay? So Annie and everybody else who are thinking, well, the take profit should go up in here, the answer is absolutely not. You cannot risk, it doesn't matter the stop loss number 1, 2, 3, 4, you cannot risk more than you are making. Okay? Now, let's clarify one thing. I'm not saying that Annie is wrong, everyone. Silas is with Annie, just above the red line, okay? So I'm not saying that Annie and Silas are wrong. What should they do? Take profit 3 times more than the stop loss, so above the red resistance line. The risk is that the market may reverse at resistance. Yes, sir. Okay. Work with me, guys and ladies here. If you have entered here and this is your take profit, which is okay, nothing wrong, what should you change in your plan? Annie and Silas, work with me here and everybody else, but you two chose that the take profit is up in here. Before entering the trade, what you should change in your strategy? All of you are right. Risk reward should be minimum, it's a minimum 1 per 2. If you are risking 1 pip, you should earn 2. If you are risking 1%, you should earn minimum 2. Better 3, 4, 5, right? So if you are entering in here and you are going to put your take profit up in here, what should you change? And again, there is no right or wrong. Maybe you are going to think like George says, well, I'm not going to change my stop loss, I'm going to leave my stop loss at number 4. But because there is resistance up in here, maybe I'm going to have a difficult time, right? Maybe I'm going to have a difficult time going after 2, clone again. So for the ones who are agree with the stop loss number 4, look where your take profit must be. It's not optional, it's a must. Background color, there you go. This is not optional. If you are risking 1, you should go after minimum 2. Oh yes, it's not optional, no sir. Take profit must have at least double pips that stop loss. Yes sir. Silas says stop loss. Yes, so N and Silas, I'm going to delete the quadrant here, delete. N and Silas, if you want to take this opportunity in here and put your take profit up in here, right? up in here, you should change your stop loss level from 3 to where? 2? This is a question for all of you, everybody. If you are going to enter and take your profit up in here a few pips before past resistance, so this is take profit, where should your stop loss go? Stop loss 2, but the market is not exact. 1 stop loss 2. Stop loss 2. No, stop loss 2, you are still risking. I don't know if I understand correctly your answer, Annie, but if it's stop loss number 2, you are still risking the same amount. You are still risking the same amount that you are making. We wait long time to enter, we wait also long time to take profit. Yes, sir. So what should you do, everyone, if you are going to take this trade and take profit up in here? Your stop loss should be number 1. Agreed? Maybe it's not, it's almost 1 per 2, right? Okay. Now, so if my stop loss is at 1 and my take profit is a few pips in front of past resistance, is this a good trade? Is this a good trade or an okay trade? Is this a good trade, everyone? Three, four. How you call the structure? One is retracement, the second is extension, and the other line I forgot. Structure starts with extension, retracement, extension. Every structure starts with an extension, so extension, retracement, extension. And he says no, why not? Why not? Why is this not a good trade, everyone? Why not? George, no. Sila says no, and he says no. Okay, why not? Teachers, why isn't this a good trade? I mean, I have my stop loss, I have the counter trend line break, and I'm going to risk 1 and going after 2, right? Why is this not a good trade? Risk reward is not okay. Well, let me see, just graphically. I'm going to clone this. Okay, let's clone. Yeah, okay, it's 1 and 1.5, right? Clone again. Should be a little bit higher, right? So it's not, but anyway, I'm making more than I'm risking. Where is the color, background color, there you go. Okay, yeah, it's not the perfect one for 2, but still, if I'm going to win, I'm going to make more that I'm risking, right? You will be stopped out soon. How do you know? Big chance the stop loss is hit. How do you know? Great answers. How do you know that you have a great chance for the stop to be hit? How do you know? I'm a friend of Max. Okay. Okay. Max is watching the recorded webinars. How do you know, everyone, that you are going to be stopped out in here? There is no right or wrong. But you said should be longer the first retracement. Yes, sir. Yes, Victor, it is. First one is it's extension, then is retracement, then is extension. And the extension must be by rule longer or bigger than the previous retracements. Stop loss too tight. But this is your opinion, Miguel. How do you know? Experience. Okay, fair answer, Amy. Fair answer. So now I'm going to delete a few things. Delete one, delete, 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 delete. Okay? Fair point, any experience. The best place to put your stop loss is number 3, everyone. Number 3 is the best, most logical place to put your stop loss. Okay? Now, some of you said number 4. Some of you were thinking number 2. Why is the number 3, technically speaking, the most logical place to put a stop loss? I should look my take profit longer than my retracement. Victor, I don't understand you, my friend. Are you mixing profits with the extensions? Question, everyone, why is the number 3 the most, I'm not going to say the best, because it's not a matter who is right, who is wrong, but the most logical step is to put the stop loss below number 3. Why is that? Best risk reward? No. No. Why not? Why number 4? It's not technically speaking the best option, the most logical option. Okay? All stop losses are valid. Number 1 is okay, number 2, number 3, number 4. But the number 3 is the most logical choice. And this is where and how you should operate, everyone. It doesn't matter 15-minute chart, 30-minute chart, 2-hour chart, 1-hour chart, daily chart, weekly chart. Because of the support? No. Just under support? No. No. No, it's not that. The answer is in the market wave theory. You should learn this by now. The market wave is the answer. Who knows? Why is the number 3 the most logical place to put the stop? Number 4 needs a take profit which is too high within 2 resistance lines. Yes, but this is not the answer. Why is the number 3 the most logical stop? Number 1 is okay, number 2 is okay, number 4 is okay. They are not wrong. But number 3 is the most logical stop. Okay, here is the answer. The market wave is the answer. You have the extension here. You have the retracement here. I'm going to color code with this color. And you have the next extension here. Okay, so red extension, green retracement, orange extension. Okay, now can the market take you out on the stop loss number 1 and take you out on the stop loss number 2 and still be in an up wave? Can the market do this? The market can hit your stop loss number 1, can hit your stop loss number 2, and you are still in an uptrend, up structure. Can the market do this? What's the question? The market went down, 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 stopped you out on number 1, went a little bit up, stopped you out on number 2. Did it change the structure? Did it change the market wave? Yes, it goes down until a little above number 3. Everyone, can the market stop you out on number 1 and number 2 and still be in an up wave, up structure, uptrend? Yes sir, if it goes below 3 then the up structure is broken. And that's the answer why the most logical play, not the best, okay? Because then you are going to have problems with the take profit, and as you can see you have you have many variables to take in consideration before you enter into a trade. But the most logical place is the number 3. This is why. Only if it goes below 3, the uptrend, it's over. Yes, Miguel, it maintains the structure intact. Okay? The answer is yes. Number 3. Remember everybody, this is how you should trade until at this point in time. With the knowledge that you have, this is how you should think, and this is the stop loss level. Okay? Now of course, we have some problems here. And the problem is, man, but if I put the stop loss on number 3, right? So this is my risk. So I cannot take my profit up in here. Agreed? Agreed? Okay. So in closing of this entry, who in here would enter this trade, and what will be your stop loss of choice? Okay, there is no right or wrong. I would enter this trade, no problem. Passion, but you don't have enough risk reward. Well, I'm going to shorten my stop loss to 1. But you said that the most logical place is number 3. Yes, it is, but I don't have any other chance. If I want to take advantage of this opportunity, I need to shorten my stop loss in order to get more profit. Okay? Now, in the last stage, talking about what is the most logical place, right? And the challenge of the risk reward, in the last stage, the question is this a high probability trade or is this a low probability trade? How much of a technical risk do I have in here? Do I have a lot of technical risk? Do I have a small technical risk? Right? I cannot say, well, I know that the most logical place is the stop loss number 3, but I don't have enough space because the market is going to hit resistance sooner or later. So, should I stay out and find another opportunity, or should I shorten my stop loss and increasing the probability of the market to stop me out? What should I do? What is more important, to worry about a resistance or choose a wrong stop loss? Great question. What do you think? And it says 75%. What is the, Miguel, we had a webinar, I don't know if you were in the webinar, I explained to you what is the number one reason, the number one metric in trading that doesn't allow traders to earn consistent profits or consistent money. Stop loss at number 4 and take profit higher than a resistance is also okay, correct? Yes sir. We just need to wait longer. Yes sir. Again, everybody, all of them are okay. Number 3 is not the best, it's the most logical. Okay? George said, is number 4 okay? Yes it is. Is number 2 okay? Yes it is. It's below the uptrend line. Why not? Number 1 still okay? Why not? All of them are okay, but logically number 3 would be the logical choice. But when it's time to trade, as you can see, you need to make compromises. You need to be flexible. Okay? You cannot be rigid in here. Oh, it's number 3 and game over. Well, okay, but you are not going to enter in this trade if you make if you take your profit up in here. Right? So, in the end, who would enter this trade like this? Number 1 and take profit up in here. Resistance is the dynamic part of the trade and could even be broken at the first try, but stop loss is fixed static figure. Yes, stop loss is the most important. Don't chase profits, everybody. Manage the risk. Professional, profitable traders are managing risk first and they go after the money second. Loser traders are chasing the money first and they are managing risk, if at all, second. Okay? So this is what? This is a high risk trade because my stop loss is not in the most logical place. So can I take this trade? Yes, I can. But in a series of 100 trades, I cannot trade like this often, right? Why is that? Because the most logical stop is 3. Okay, so let's see what is going to happen. We are in the trade and bam, right? And we are happy, yay, the market hit our take profit. Right? So out, 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 the market wave again, extension, retracement, extension, retracement, extension. We're going to wait, 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 wait. There you go, counter trendline break again. Let's make it yellow. Okay, counter trendline break. Again, we have a full body candle on the other side of the counter trend line. There you go. Where should the stop loss go? Should the stop loss go here? Number 1. Should the stop loss go here? Number 2, 3, 4. Which one is the most logical place right now? What do you think, everybody? We encountered another trading opportunity. We have another entry. Okay, where should the stop loss go and why? What do you think? Should be number 1, should be number 2, should be number 3, should be number 4. Near 1. Okay. Why near 1? Sorry, near 2. Not. Again, there is no right or wrong. Any you're thinking maybe that the most logical place, right? The most logical is the stop loss number 2. Right? Because it's the same logic. Extension, retracement, extension, retracement, extension. Okay? So if we are entering in here, this is going to be our entry. Right? And this is an area and the market bounced. Right? Number 2, yes sir. Based on your arguments, you need to think for yourself, Miguel, also. And again, thank you for your comments, but everybody, your job in the webinars is not to agree with me, is to think and make an educated decision. This is your job. Okay? So Miguel is courageous enough to say, well, based on your arguments, but you need to think for yourself, everyone, and say, well, this makes sense, and especially think and say, well, this doesn't make sense to me. Then you are going to learn. You don't need to accept, oh, FXPassion is saying so, it must be like this. We need to think, right? What's logic, what makes sense? This time we are not afraid of the resistance red line because it is already tested. Great answer. So let's see what is happening. Going sideways, moving up, moving down. See? Stop loss number 1, the market hit. If this would be your stop loss, you are out. Right? So the most logical place is number 2. I will go with number 3. Great answer. Why not? Why not, right? So let's see. The market is falling, moving sideways, going back up. Can you see, everyone, why the 2 is the most logical place? Victor is even safer. It's number 3. It's far away. Right? So we have what? Extension, retracement until here. There you go. And as George said, we are not afraid of resistance anymore because the market tested. Number 2, maintain structure. Yes, sir. Okay. So we are here right now. Remember, the market can do anything it wants, when it wants, for how long it wants. Okay. Now, why is it falling right now? Why is it falling? Hit resistance again, right? So the market can go down, up, hit the wall, can go down, up, hit the wall, can go down, up, hit the wall. We don't know what it's going to do, but the market can do anything it wants, when it wants, for how long it wants, right? We don't know, maybe it's going to break on the next, maybe isn't going to break on the next, right? Maybe it's going to start to fall, why not? From the daily standpoint, we are going to delete the arrow, delete this one, delete. Right, from the daily, where are we from the daily? This is the daily chart. Right? Now, okay, we have 15 more minutes. Listen to me very carefully what I'm going to tell you right now. Take a pen and a paper and listen to me very carefully. Where is the... there you go. When the market hit the first time, or at least when it's not near the resistance and you are going long, the first trade is okay. The first trade is okay. Retracement, yes. So the first trade is okay. Now, what happens, because from the daily chart we have highs and lows, high, low, high, low. Okay, I'm going to circle this in red because you have highs and lows. Now, if you are going to go long in here, this is risky. Okay? go passion, but the market is making higher highs, higher lows on the 2-hour chart. The trading time frame is the least important time frame. So if you would enter in here in between, it's okay. Now going long in here, I'm going to write going long at this point in time is risky. I'm talking about technical risk. Okay, this is risky. Why is that? Exactly because we hit the wall of past resistance. Okay, and we learned how resistance works. See in here it went down, hit resistance here. Okay, let's color code this in what color? Violet. There you go. It went down, it went up, hit the wall here and fall down. It went sideways, hit resistance in here, violet line, it went up, hit the wall here, fall down. So when you're talking about probabilities and chances, there is a great chance, and of course at this point in time it's a speculation, because we don't have a counter trend line break, we don't have a bearish candlestick formation, we don't have the market making lower lows, lower highs. Agreed? But it's still risky to go long because we hit the wall. Because when the market hits the wall, 80% of the time it responds and it's going to fall. Okay? Now, where is okay to go long again? You should wait, and we are on the daily chart. It's just an example. It goes the same on the 15-minute chart, 30-minute chart, 1-hour chart. It's always the same. You should wait until the market makes a higher high compared to this high. This is the so-called risky area, the gray zone. Okay? What is high probability? Statistically speaking, and statistics are not guaranteed for the future, what is high probability is the market is going to react because of this past resistance and fall. Okay? Going long in here, this is the so-called risky area. Why is that? Because you are hitting the wall, hitting the wall, hitting the wall. Okay? You have a wall here. Oh, color code this in black and clone. There you go. I'm going to delete this one. So this is the wall. If the market is going to push higher and make a higher high, remember, we are still in a retracement. It doesn't change a thing. You need to have the structure before your eyes. Take profit out, up in here. Okay? If the market is going to move further, make a deep retracement, is going to make a higher high, this is the signal that you can go long again. Why is that? Well, it's pure logic, because it made a higher high, right? But remember that we are still in a down structure. It doesn't change anything. Okay? And again, before you go long in here, because the confirmation it made a higher high, remember you have past resistance in here and past resistance in here. Okay? But this is what is called the risk area. Okay? Again, why is that? You don't have anything. Okay? You don't have anything in here that is telling you from the confirmation time frame that the market is going to go long. anything. Oh, Passion, but we have on the 2-hour time frame higher highs and higher lows. The trading time frame is the least important. Is it correct, the concept that if a resistance has been hit many times it becomes more difficult to break? Yes, sir. Yes. It's not a guarantee though. Right? The market is moving, hit resistance, hit resistance, hit resistance. Miguel is asking, is it true the concept that it gets difficult to break? The answer is yes. But sometimes it's going to break. Silas says the last candle blue is indicating a fall. Not yet, my friend. You need to wait. This is the daily chart. You need to wait until the end of the day to confirm the candle. You cannot go short right now, everyone. You need to wait for the what we have learned so far, counter trend line break and the confirmation of the short-term downtrend. Minimum 2 lows and 2 highs, and the second low is a lower low in the second high. Miguel says, so the first time is crucial. Well, yes. It's crucial in breaking, right? You were right, Miguel. The more times it's going to hit the wall, didn't break, hit the wall, didn't break, the more difficult it is. But this doesn't mean that it cannot break the wall. NZD CAD monthly chart. Looking here, Miguel and everybody else, great question. Look at the wall in here. Black wall, full color. Look in here. And you don't have the crystal ball when it's time to trade, you know. Hit the wall once. Oh, this must be resistance. Hit the wall twice. Man, this market is going to fall. I mean, we are on the monthly chart. This is a purebred short trade. Right? Hit the wall 2 times. Man, it hit the wall for the 3rd time. This is a 100% short trade. I'm watching FXPassion's recordings. Bam! You just lost. It's an example, of course, but this shows you. Look at this week, everyone. And this is the monthly chart, but can you see? Didn't break, didn't break, didn't break. Okay, still didn't break, but it went up. On the smaller time frame, you have here, I believe, 20 highs and lows, higher high, higher low on the 2-hour chart. And of course then it reversed, right? But just to see this small wick and you see this small wick or no wick, right? So the answer is yes, it gets more difficult and more difficult and more difficult, but still it can break out, right? Okay, Miguel? So the answer is yes, but sometimes don't take this for granted. Sometimes it can break. There are no guarantees. Okay, Miguel? Okay, everybody, our time is up. See you back tomorrow. Now the lesson for today, address when you trade, especially for the one who are advanced, you learn about the crowns and the Fibonacci's, right? And the other systems, area strategies, address resistance and address support and address pivot point in your take profit. You need to learn, you need to address your stop loss, where is the most logical place. If you don't have enough capital, okay, you go with the 1. If you have enough capital, you should go with the 2. You should go what is the most logical. Stay out of the way of the market. Stay out of the market wave. Okay, stay strong and trade with passion. This is FXPassion signing off.